Hi, everyone. I'm Sarah Martin, the Associate Director of Forecasting at Dodge Construction Network, and today we will be looking at March's Momentum Index. As a reminder, the DMI tracks the value of non-residential building projects going into planning, and that typically leads construction spending by about 12 months. The Momentum Index pulled back 8.6% in March to a reading of 164, with the commercial segment falling 3.2% and the institutional segment dropping 17.2%. Now here's a breakout of each portion of the index. We have commercial on the left and institutional on the right. So as we've been discussing over the past few months, commercial planning generally retreated in 2023, while institutional planning largely improved. In fact, in February, the institutional portion of the index was sitting 29% above year-ago levels. With the 17.2% drop this month, however, that positive trend reversed a bit. Now, we continue to believe that strong market fundamentals will support institutional planning this year, but alongside its strong growth last year, this side of the market is at a higher risk for a more substantive correction in 2024. Now, digging into this month's data, much of the decline on the institutional side can be credited to lower levels of education planning. One segment in particular stuck out: life science and research and development labs. Now, post-pandemic, we've seen lab construction surge amidst a low interest rate environment and strong demand for drug research. Between February of last year and February of this year, labs accounted for roughly 34% of total education planning, with that share reaching as much as 59% in some months. In March, however, that share dropped to 7%. Many projects will come online in 2024 and potentially lower momentum for new planning projects as the market absorbs that new supply. Now, switching gears on the commercial side, we saw weaker office and hotel planning push this portion of the index down for the third consecutive month. Data center demand continues to bolster planning on the office side, while core office construction really faces much weaker conditions. Now, while the index dipped more than usual this month, it can be volatile and prone to strong increases and decreases. So one weak month doesn't necessarily create considerable concern. Dodge continues to expect that the DMI will remain steady throughout 2024, alongside rising confidence in 2025 market conditions. Towards the latter portion of the year, the index could see more opportunities to accelerate as interest rates begin to tick down and more growth is seen on the commercial side of the index. And that about wraps it up. Thank you so much for watching.